That's what I should do. All right, so a support. This is a support level. I'm gonna take my time. I'm gonna take my time. So a support level. A support level is when, normally people tell you, oh, buy off the support. That's where you're supposed to buy at, and you're supposed to get in for a buy, put your stop loss under level of support and aim for the resistance. In this case, we can sell at support, we can sell under the support, whatever the case is, we can sell at support. You don't have to always buy at support. And a resistance. So we have the resistance. I can't spell resistance. That looks wrong, but yeah. So at a resistance, it's pretty much the same thing, just the opposite. So here, you can now sell at a resistance. No, you can buy at a resistance now. So you don't have to follow everything people are saying to you, because now you can sell at a resistance, you can buy at a resistance, whatever the case is. In most cases, you'll be buying above this level, and then you'll be selling at this support too, if that's the case. Yeah. So we can also say, instead of using support and resistance, we can also say sellers. We can say sellers control. I mean, you don't have to use this terminology, but I'm just trying to show you. And then we can say buyers. Buyers control. And the reason I put this is because when we think of support and resistance, this is how people view it. This is how people are going to view it. And that's perfectly fine. So here we have sellers waiting at this zone. So let's just say this is price, I don't know, 500. Let's just say 5,000. This is price 5,000. So we know sellers are in control of the market. Sellers are looking to push price down. So let me just type everything out. Sellers are looking to sell price down at 15,000. Right? Sellers are looking to push price down from 15,000. And let's just say our support level is, let's just say this is a crazy support, but 14,000. Right? So this is 14,000. So this is going to be the same thing, just different. So let's just take this and let's just change this. Buyers are looking to buy price. I don't know why I just didn't type it out. Up at 14,000. Right? So buyers are looking to buy price back up at 14,000. And the reason I'm typing all this out is because this is the key part, and it won't be support and resistance. It will be the highs and lows. So as I'm explaining this, it's not support and resistance. This mainly takes effect with a high and a low. And I'll show you in a bit what that means. So at these levels, price is in control and both parties are fighting. So in this scenario, both parties are fighting and they're looking to see where is the market going to push. So price is going to fluctuate between this area and it's trying to figure out where it wants to go. So that's why we trade the way we trade, because this will happen. So let's say price wants to sell. It's going to do whatever it wants to do, fluctuate in here and try to find who's in control. So then price is going to break this zone. This is the indication part. This is an indication telling us, price is indicating us that it wants to go to the downside. And the reason why it does this is, let's take this and let's just move this over. Remember, sellers are here. So let's take this, move this over. Sellers are in control of this area here, but they're pushing to gain more control. It's like a battle. It's like an army. They're looking to take over as much territory as possible. They're looking to take over as much territory as possible. So they're trying to take out the buyer's territory. And the buyers are going to put up a fight, of course, until a certain point. Oh, snap. I marked the wrong thing. My apologies. let's just take this and let's just pull this over. So the buyers are going to put up as much as a fight as they can until the sellers will kick full in control and look to push price down. So now there's no buyers in the market at this zone. So this zone right here, anything under it, the buyers have no control over. So that's why in some certain scenarios, or in most scenarios, we're not afraid of price buying back up and then going all the way back up, because we know under this level, sellers have a little bit more power than buyers do. And once again, we don't trade the indication, because this is, since price breaks out and there's no buyers here anymore, we got to figure out what's the next level that buyers are going to kick in at. Because now, since there's no sellers and all sellers are in control, there needs to be somebody buying it. There needs to be a buyer in the market. There can't just be only sellers, because then everybody can make money off of this, right? So then price will find an area, find a new zone for price to find buyers at. And that's the indication part. So now we have a new level where price is saying, okay, buyers are in control again here. And what are buyers going to do? They're going to try to push price back up. And that's perfectly fine with us, because now this game gives us all our information that we need. So now price is going to try to push as much as the sellers it can out. That's the whole goal, to get all the sellers out. Buyers want their territory back, basically. The buyers want their territory back, and then they're going to try to push back above this level if they can, so their buyers can get back in control, right? But it's just too many of these sellers in the market right now. So it's going to be more sellers trying to push price down back under this level, which will cause price to continue back down. Back under this level, we'll be looking to take trades back under here once sellers are in control. And the reason this happens is because we have the indication. So this indication is basically indicating you that sellers have more power at these levels than it do for buyers. Sellers now have more control over the market in this area. So that's why the market moves in the way that it moves, because if somebody gains control, the indication is telling them, hey, now we have enough power to push all the way down to here. The buyers are going to try to put up a last fight. They're going to put up just any type of fight they can, but it's just too many sellers now in control of this whole territory. This whole territory now is the sellers. This whole territory. And everything under here is also in the seller's control. So basically the buyers, anybody trying to buy this, is walking into they're walking into a landfill full of mines, or like the landmines. That's what it's called. They're walking into a territory full of landmines, and they don't know when price is going to push down. So the correction can go as far as possible, as far as the bulls can push up price, until the sellers are like, okay, let's kill these guys and get them out of here and continue back down. And that's what we trade at, because people coming here, trading here, they don't know how far they can go into the base of the buyers. They don't know where the next buyers are at. It's like the buyers are hiding in a bush, and then they'll sneak up, pop out, and that's when we know, okay, whenever we get to that point, we have to be on alert of watching out for the buyers. So trading the breakout will only lead you until not knowing where price is going to go, and it can go as short as this. So the breakout can happen, and it can be as short as this, and it can be as big as this. But the whole point of this breakout, the whole point of the indication, is so that we know and we're prepared for when the buyers are going to take control of the markets and try to push back up. That's the whole goal of everything, to know where everybody is at on the playing field. So if we know everybody's out on the playing field, we know exactly what strategy we're going to use to take it out. I just love some water, bro. I just love some water. Anyways, yeah, so our entry will come from this level being broken once again. So once again, this correction can be a retest. It can also be a retest, which will cause you to also look for the same thing on a smaller time frame. So now on the smaller time frame, if it was a retest, what you will be looking for is the same indication on a smaller time frame, and then the correction, and then another continuation breaking the low, and you'll just put your stop loss above the previous high. So here you'll just be looking for bearishness on the smaller time frame, which will be the same thing that we're looking at on this time frame. Just because you change the number of the time frame that you're on doesn't mean the charts change. Nothing changes. The only thing that's changing is your lot size and I guess the price. I guess. So back under this level, we're looking to take a position. And let's say we take a position here. Our stop loss will be above this previous level. Because if price starts breaking highs and we're already looking for a position and we got into our position, we don't want to see price break highs anymore. If we're like, okay, this is where I take the sell, that must mean sellers are in control. So once again, if we go back to what a downtrend and uptrend is, so a downtrend is going down, breaking lows. It's not, when price is on a downtrend, it's not trying to break highs, it's trying to break lows. So for price to break a high in a market of a downtrend, that's only telling us, hey, price is bullish. Price is trying to become bullish. And you never want to be in a fight where it's like, once again, you never want to be in this fight. You never want to be in a fight where buyers and sellers are in control and you're in the markets and you're trying to figure out which way it wants to go. We're getting into the market where price is only in one direction. That's the whole goal. So under here, we know price is only going to be in one direction until here. Ooh, excuse me. And then we have another indication, another correction, and it's a rinse and repeat. Because once again, this is a trend. So if it wants to go down, if it wants to start a downtrend, it will start a downtrend. And if it wants to start an uptrend, it will start an uptrend. And that's just the basics of everything I'm explaining. But the indication, we do not trade that. The correction, we do not trade that. Anytime price makes a new low, price can make a high. Now with this, right? So once again, when price makes, oh, let's get back into it. The resistance and support, right? So this is a higher high. And let's say this is a higher low, right? Once again, these are also support and resistance, you can say. But I'll look at this as where sellers and buyers are in control. So here we know that sellers will kick into the market around here. And then here we know buyers can kick into the market around here. So if we see price break up to the upside, that's good for us because now price is telling us, hey, above this level, there's no sellers to keep price down. So buyers are in full control above this level. There'll be a correction in the market. And then price will continue back up, trying to make a new high. And we'll be looking to take entries back above an area where we know who's in control of the markets. And the reason why price once again corrects itself is because there's gamblers in the market, and this is definitely going to take a lot of people out because there's people just slamming trades in, just placing trades for no reason. They don't know where price is going to go. They just see it shooting up or shooting down. So they feel free and they feel the need to just place any trade anywhere because people think everything is just going to keep going straight up. They think everything is just going to go straight up, straight up, straight up. Profit, profit. That's all people think. Nobody thinks about the longer terms. Nobody ever thinks about where is it going? Why is it doing such things? Everybody just wants to make money and call it a day. So there's people trading this breakout. They don't know how far price is going to go. But with this indication, this lets us know how far price is going to go. And this lets us know what we can target. So once we get into a trade roughly around here, we know it's a target, but we don't have to get out on our target because once again, this is going to try to start another trend. It's going to start another indication. There'll be another correction in the market and then another continuation later on. So that's just basic ICC for anybody that just needs help explaining it. I'm going to see if you guys have any questions right quick in the Discord. Is that any questions? How do you get confirmation to enter? Once again, I just definitely said that, but I'm gonna definitely repeat it again. The confirmation to enter the trade is when price is under that zone that it first broke out. The reason why you can just flat out enter, especially with a closed candle, when you can just flat out enter, let the candles close and price is closing under your zone. The reason why you can just enter is because this is a reaction level. This is price under this level is telling you sellers are in control. For the reason price is under that level is because sellers are trying to take back control of the markets anyways. And sellers are in control of that market. So we know in our heads that, hey, if I take a trade here and I'm taking a sell under this level, then I should be at least 90%. Let's just say 90. Let's just throw something out there. But under this level, we know sellers take control of the markets. So I know under this level, I'll be better off in a sell than I would be for a buy. What time frame do I enter on? I look at the 1 hour time frame, but when it comes to entries, you can pretty much enter off anything, honestly. I would just suggest you mark up your charts on a 1 hour and you can take your entries from the 30 minutes to 15 minutes to 5 minutes. As long as everything matches up. So if you want to get into a sell, if you see a sell on the 1 hour, don't have the 5 minutes still creating an uptrend or something. You have to make sure everything aligns with each other. What's up, bro?
Fine. Are you on Discord?
Yeah.
Hi, Discordies.
Discordians.
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 You make sunglasses?
Yeah, but I'm recording, so give me a sec.
Oh, shoot.
Yep. That's crazy. He said, no, let me show. What was I gonna do? I literally was gonna do something. Oh, yeah. So let's just, all right, take a picture of this if you need to, whatever you need to do. Take a picture of this if you need to, or whatever you want to do. But yeah. I'm gonna delete in 3, 2, 1. All right. So prime example. Right, prime example, right? We have this consolidation going on, or we can even use this and then go into the consolidation, right? So price here had a low, the swing low. This is our swing low. So we know at this level, price is getting bought up, right? And then we also have price having a swing high. And I kind of mark mines. You can mark. I personally don't mark the longer wicks, and I don't want to confuse anybody, but I know this area is an area that price. I normally look at body closes, to be honest, but the wicks, I definitely take notice of it. But I look at the body closes because I feel like when a closed candle happens, it's like, all right, that's a done deal. We're stopping at this level. We're stopping at this price, and I'm closing. I'm closing here as a candle. So first is first, right? People are gonna trade out of session and they see this breakout. So boom, there's a breakout here and it's out of session. And people are trading this and they get liquidated. That's just clear as day, right? So we have our highest point and then we have our lowest point. Price ends up breaking down to the downside, causing the lowest point in the market or a new low. So let's just mark this up. Boom. And we can say new low. So this is a new low, lows. This is a new low in the market. This specific low right here. This is a new low. Right here. Right? So then in this scenario, we have price buy up a little bit and then end up selling and making another new low in the market. So based off of this, I would say you would have been on a smaller time frame trading this, but let's just say we didn't trade this at all. It's perfectly fine if you didn't or did. Let's say we got a new low though. So these are two things that's telling us, hey, price is bearish, right? So once we have this new low, we have another correction. So that was a new low. It corrected itself a bit and then made a new low. Because remember, sellers are now in control of this whole market. So there's going to be more bearish things that happen than there's going to be buying things, right? So as we start to see prices also maintaining the high levels, like I was explaining to you guys earlier, it's going to maintain these high levels because price is not focused. Since now sellers are in control of the market, since they took out all the buyers sitting here and pushing price up, sellers are not looking to break highs. they're only looking to break, they're trying to make damage to the downside. They're looking to break lows. So there's another correction in the market. And something like this, you can definitely take a sell off of this and just saying, oh, price came into this area, there was a new low, there's a correction, price came into the zone, and we can sell something like this. But let's just say we didn't sell nothing like that due to the fact that it was out of session. Right? And that's perfectly fine. We can take sales under this level. And now we can take sales, or there's the next indication. So let's say we can take sales under this level. And we can look for sales being under here, or we can look sales to being under here. There's another new indication, and this is roughly at 9:30 open. Price corrects itself again. Out of session comes, and then there's the next session. So we have price maintaining high levels here as well. And the whole time we're just maintaining high levels and we're not breaking any highs. We're only breaking lows. So the only thing you should be thinking right now is price is bearish. That's the only thing that should be in your mind is price is bearish. So let me just figure out how to, there we go. No. It won't let me, okay, there we go. And let's just drag this over. All right, so now it wants to do it. That's crazy. All right, so we have a new low and price is once again bearish. There's another correction in the market. Price comes in and retests these highs. That's perfectly fine that it did that. Price can do whatever it wants as long as it's not breaking highs. And then once again, we have price, let's say here, trading back in session. And we can take sales once again under this level because we know price is bearish under this level. And we can look for price to hit these lows. Even though those are small targets, these are definitely signs of telling you price is getting bearish and bearish and bearish. And then we do have a sell-off. This actually happened to be news, which was, I want to say this was CPI. No, it was FOMC. It was FOMC, price sold under this level, and you could have been targeting these lows that happened the last time we came over here. So now we have a new low in the market, price starts to downtrend, and then we have more new lows, and then we have this overall swing low. Right? We have this overall swing low, which will cause price to buy up. We have a new low in the market, so price can buy up, try to liquidate anything in this site over here, because there's probably people FOMOing this trade. People want to get in this trade. Because this was a new session, 9:30. People are trying to FOMO into this trade. The trade is already over. And then they're trying to get in this trade, and then they get liquidated. So now we have a new high and we have a new low. So now let's say we already exit the trade from up here. Let's say we're no longer in these trades and we're looking for a new setup. So now as we wait in between here, we mark our higher level and then our low level. And we just wait. We wait to see which way is the indication going to be. So first we have this first indication that price is trying to break down to the downside. So we definitely pay attention to this as a new low. So we know under here, under the support level, let's just mark this, new low. We know under the support level, sellers are going to be in control of the markets, and there's going to be only seller, like a seller's mindset under this level. So now, when price is under this level, we definitely know that we can take sales back under here because we have a new low under this level telling us price is bearish. So we can say that we was targeting this level. And then we have a new indication. Price corrects itself. Coming into the next session, we can sell price from under this level. And that's just simple. Simple just ICC, just all around under this level. And then we make a new low. So boom, once again, now we have our, let's just go ahead and say we took that. Should I mark up what I'm like the trade setup? Should I just mark them up? Let's just do it. Let's just do it. No, not that. Let's just, so you can get an idea of what you can look for. So let's say we took this trade and we was targeting this level, and you will be targeting this first. You'll be targeting this first. And whatever the stop loss is, you can make it smaller because this is actually 50 points, which is pretty solid. Me personally, I'm still trying to make my stop loss. My stop loss is normally 50 points, but I'm trying to, because normally when I'm trading, I don't even need a 20 point stop loss. I'm pretty good with a 20 point stop loss. So I'm trying to redefine my stop losses to be like 20 points, 10 points, as much as possible, because when I'm entering, most of the time I'm entering off a reaction area, or all the time I'm entering off of a swing low, swing high, or reaction area. So I see that price is just going to react based off of what happens before. All right, so we can definitely target this level. And then as we start to see price, develop into just overall the session, because this was in session right here. Yeah. This is in session. As we start to see price develop, we can continue to hold until we feel like, okay, price is looking to break up to the upside, such as something like this, where price kind of broke up to the upside a little bit. And you would have been like, okay, maybe I'm good at this level. And that's just a trade that we can take, or you can say something like this, where you was taking a trade based off of this and then placing your stop loss wherever you want to place it within here and target for here. But remember, our target levels are not the levels that would be like, okay, this is where I'm going to get out. We also see that price developed here a little bit more. And then we started to see price kind of stop and get choppy roughly around at the end of session. Normally, I close my trades at the end of session. I'm not going to lie. Sometimes I'll be like, yeah, I don't want to hold this. But in some scenarios, if you feel like you want to hold for more, you can definitely hope for more. You've seen that it did pull back, but under this level, we had another entry level. We can enter here too as well. And we can definitely do the same thing that we did before. But now we're going to just progress into the buys. So price makes a new low. But like I said, whenever price is on a downtrend, if we see price starting to try to break to the upside, we can definitely look at that as something being like, okay, price is going to become bullish at certain point or a certain level. So here we do have price with a high. Price comes into this area, it doesn't break. Now, this is something we couldn't trade at this point in time, but I'm gonna definitely show you. I'm gonna definitely show you that the fact that price is buying up to swing highs and swing lows. So this is our swing high at the current time. And then we see price break up to the upside. And this is very important because this is the same zone that I was using. So we have our lowest point and then we had our highest point. And here we've seen that price did buy up, but it didn't correct into the area that we wanted to. It ended up buying up some more, which is definitely cool because we're good anyways off the sales. So then we have price make a new high. This is definitely important, especially the fact that we're on a 1 hour. This is definitely important. So we know that price is trying to push out above this level. This is very important. So this means that above this level, we can possibly look for buys. Or we can possibly look for something to push higher than this, right? So we can definitely say a new high level above here. So we can say new highs. And let's just put this here. And we can say new highs. And we can delete this because this doesn't really matter anymore. And we have our highest point, and then we have our lowest point. This actually do matter. This is the highest point and then our lowest point. Within here, we start to see price consolidate. And we start to notice that as we start to see price make this high, break some lows, fail to make a high, fail to make some lows. And it was just kind of all over the place. And this was in a time span of 2 days. So this is Friday and this is Monday. And price wasn't moving. And then price at this resistance level ended up selling, coming down to this level. And then price ended up buying back up. And we're just sitting in this range. We're not choosing the trade yet until price breaks out and makes an indication. So we did have this first high, which could have been our indication. But just to be on the safe side, we definitely waited for a price which gave us a new indication. So this is our high level that we had before. And this is our new indication. Price corrects into the, because when price makes a new high, it will make a new low. And what I mean by new low is just it will make a correction. So price does have a new high, and back above this level where we had this first high, or even back above this level where we had our swing high in the first place, we can look to buy price. So we can buy price within here, or we can buy price within here. But mostly everybody's interest would have came from here because this was New York session right here. And buying price back above here, putting our stop loss roughly below these levels, making sure it doesn't break any lows. Because remember, as price is uptrending, you don't want to see price break any support levels or any lows. So buying price here, and we're targeting this level here first. But remember, a target level is only where you make decisions. Now, I don't know how everybody else trades, but I trade in a sense of like, I'm always looking for the trade to continue longer. I always want my trades to continue longer. I never want to like kind of get out of my trade, honestly. Even though I get out at the end of session sometimes, I definitely look to see if price wants to continue longer because I want to hold a trade for, 300 points, 400 points, or whatever the case is. So in this scenario, price blows right through our target level, which is causing us to see another indication. So this indication happens, there's a small correction in the market, and then price continues to push up. So now that we see that prices continue to push up, it has a new high, corrects itself, and then continues to push up. Now, in these scenarios, price is a little bit more choppy. So for us to try to find another trade was going to be a little bit hard due to the fact that price is not really giving us any full correct structure. Everything's really choppy, consolidating. So we don't have to trade this. We don't have to trade every single time we see something on the charts. We don't have to do that. We can wait for trade setups because most of the time we can get trade setups like this where we don't have to stress out about things or trying to find a position based off of this. But anyways, price ended up continuing to make new highs. And then we had a new high in the market. Price made a new high, and then it made a new low. So in between here, we have our highest point and then our lowest point. So in between here, we don't know which way price is going to go now because we did have this new high. Price corrected, and it's trying to make a new high. But then we see a break to the downside. So this could possibly be a start of a downtrend due to the fact that we broke this low here. So what we'll be looking for now is price to make this indication. There'll be a correction, and we'll be looking for price to continue on. And then this is our levels that we'll be looking at. And we'll look for price to continue on. If it continues under here, we definitely know price is bearish. And then we'll be looking for a correction and then a continuation later on. And that is ICC. That's it. Yo, my voice is gone. That's it. That's it. Case closed.